Will the stock market crash on 2021? That's a big question on a lot of people's minds. Did you make 40% profits in 2020 and afraid to lose it? In this video, we'll review what could drive stock market for crash and things you should do if such happens in order not to lose your hard-earned profits. Stay tuned and get some popcorn. Hey guys, my name is Ken. Welcome to the channel. Here I talk about personal finance and investments. I appreciate if you make a quick trade on the like button and invest by subscribing to the channel for more content. I'm not a financial advisor, but pretty sure that without a crystal ball, it is impossible to predict how stocks will fare in the coming year. Even great investors like Warren Buffett can't time the stock market crash. If you could time it, there wouldn't be a crash. You can't tell when there will be a road accident until it's too late to press the brake. However, you can take the precautions to reduce the impact of the crash and have a game plan ready in case if such happens. Because we all do know few facts from history and pretty much information about the current situation in the markets. So when the market crashes, a market crashes when investors in panic and start selling in bulk. They lose confidence in a stock because the business environment is beyond the control of companies. In the 2009 financial crisis, investors lost their confidence in banking system and trusted only the cash in their hands. Back in March 2020 pandemic crisis, investors lost confidence in businesses' capacity to withstand national and global lockdown. But the stock market recovered rapidly as the government put stimulus money in hands of millions of citizens. So what do we have currently in the markets? The pandemic isn't over yet, and the new, highly transmissible variant is identified. The world is bracing for a new wave of COVID-19 infections, as the pandemic has infected more than 80 million people and killed more than 1.7 million globally since late January 2020. It led to entire nations enforcing lockdowns, widespread halts of international travel, mass layoffs, and battered financial markets. Recent attempts to revive social life and financial activities resulted in another surge in cases and hospitalizations. Vaccines won't be available for months, and even then, a large chunk of the public may not be open to them. Overall, the US vaccination effort is falling short of its goals in its first few weeks. The country is immunizing an average of only 200,000 people a day, and many states have used just a small percentage of the shipments sent them this month. Officials blame a delicate vaccine with complex storage requirements, uncertainty over the supply of doses, and strain on local health agencies already facing historic challenges. And another topic that there are many stocks are currently overvalued, and that might be a recipe for a correction at the very least. For investors, the future is more important than the present, which is why the stock market has already been living in 2021. The current prices are largely based on the success of vaccination, a decrease in unemployment, and growth in corporate income. Reality now needs to confirm the expectations, and it will start literally from the first days of the new year. But Federal Reserve on the guard. Following its last meeting on December 16th, the Federal Reserve said it will continue to buy bonds until unemployment continues to decline and inflation accelerates. The Fed will buy at least $80 billion in treasury bonds every month, as well as $40 billion in mortgage bonds. The Fed said in a statement that asset purchases help keep the market running smoothly and a favorable financial environment. The majority in the regulator's leadership consider it advisable to keep interest rates close to zero until the end of 2023. On December 27th, President Donald Trump signed into law a $900 billion economic support bill that will include a one-time payment of $600 stimulus per person. Earlier, the president insisted on increasing payments to $2,000, and on December 28th, the House of Representatives voted to approve the initiative. Almost all Democrats and part of the Republicans support Trump's initiative. The likelihood of a positive decision remains, which has a positive effect on investor sentiment. Unless you have a crystal ball, in which case you should know what to do. Here are things to do in case of a stock market crash. Number 1, and the most important, stay calm. Many investors lost their money during stock market downturns because of their impulsiveness. I know it's easy to panic when your portfolio value takes a hit. Remember that stock market crashes are usually temporary. Just think about the earlier March event, when the stocks lost almost 30% of their value. The market bounced back well before the end of 2020, and that was during a pandemic. As such, stock market crash shouldn't have to lead you to assume that there will be a multi-year recovery. So you shouldn't lose your cool if stocks take a transient hit. Tip number 2, you won't lose your money if you leave your investments alone. The only way to lose your money on stocks if you sell them when they are down. If you pledge to leave your portfolio alone during a stock market crash, you may not lose so much as a dime. Of course, to pull that off, you'll need an emergency fund so that if you land in a cash crunch, you won't need to liquidate investments to access money. Ideally, you should try to have anywhere between 3 to 6 months worth of living expenses tucked away in the bank where your principal is protected. The third thing you could do if the stock market crashes is to take an opportunity to buy stocks on the cheap. Stock market crashes are generally regarded as a bad thing, but that doesn't have to be the case. When stocks' value decline, investors have an opportunity to buy quality stocks on the cheap. And that's precisely what you should plan to do next year if things go south. Put together a wish list of stocks that you want to buy but are too expensive for you at present. That list can include stocks that you already own or the new ones. That said, don't touch your emergency fund during a downturn to buy new stocks. That cash should be there to cover your unplanned expenses. Rather, try to stockpile some extra cash in advance so that if stocks' value fall, you could be able to buy. Back in March, we entered our first bear market in more than a decade, and it was a doozy. But as of November, the Dow, for example, had completely recovered from its losses and subsequently went on to hit record highs. Some bear markets last only a handful of months, so even if things do go south in 2021, the pain may be relatively short-lived. We don't know how stocks values will trend in 2021, but rather than waste energy stressing out about a stock market crash, map out a plan how you'll deal with one. At the same time, make an effort to boost your cash reserves so you have both buying opportunities as well as the option to leave your portfolio alone. It may very well be the case that stocks hold steady for the duration of the next year, but it's better to be prepared for the opposite scenario in case it comes to be. Write down your game plan so you don't forget in panic and just follow it. Let me know in the comments your thoughts on the stock market performance. I answer all of them. Here are more other videos about personal finance and investments. Make sure to subscribe to the channel, like the video, and hit the notification bell. See you in the next video.